Let's get cracking. All right, so this is the state of the play in the market. So regional Australia pushes to new record highs. So I love it that they started with something positive. That's always a good sign for me. So national dwelling values were steady in January. In fact, this is the first month being January, because I'm reporting January, I can't report February, that nationally we have had a flat line. I don't know if you can see that, but we've had a flat line, which is the first time. So zero growth, zero deficit. So it's an absolute beep. And that's probably a good explanation of the national market. Don't get confused. The national market. I have to report the national market because we've got members even in New Zealand, which we'll talk about in a sec. But, of course, majority are WA. So just very quickly, last month, Sydney dropped 0.4, 1.4 for the quarter, but are still showing a 1.7 annual growth. Melbourne, 0.6 down for the month, 0.2 down, 2% down for the quarter, and negative 3.3% for the 12 months. So Melbourne definitely doing it tough, but I believe Melbourne's having a resurgence, and we might have a chat to our Melbourne correspondent, if he drops in today, Daniel Ferrugia. He gives us great insights to the Melbourne market. Adelaide, 0.7 growth, 1.8 for the quarter, 12% annually. Perth, 0.4% growth, but still growth, 1% growth for the quarter, and still showing that big 12-month 17.1% growth, but certainly trending slower. Combined capital 0.2 negative 0.7 for the quarter, and only 3.8 combined capital cities in growth the last 12 months, so significantly down. Combined regional 0.4, 1% and 5.8%. So regional is definitely outperforming combined capital cities. Nationally, flatline for the month, negative 0.3 for the quarter, and a modest 4.3 for the 12 months. Okay, so let's look a bit deeper. Let's drill down and see what's going on. So 3 of the 8 capitals recorded a decline in home values. We've just been through that. Brisbane and Perth have continued to record growth in home values, but there has been a clear and steady loss of momentum in these markets. Perth is now recording a slower rate of growth than Brisbane and Adelaide over the rolling quarter. And in the June quarter of 2024, growth in Perth home values was 7.1%, easing back to just 1%. Just on that, guys, I'm speaking to real estate agents all the time, as you know, probably 100 every month. And there's a lot that are realizing the reality, and there's a lot, probably 70%, that are going, nah, still going great guns, everything's, happy days. Well, the stats don't lie, so just be mindful. Mindful is one of the key words we use at Supercharge, because we always want to be mindful of what's going on. Okay, so there's certainly significant, trending there. So annual growth in national home values has more than halved. Regional housing markets have also shown a slower trend in value growth, even though they've reported regional pushing to record highs. So that's a bit contradictory, but let's look forward. A shallow downturn. We could see some renewed support for housing prices over the coming months, with the RBA bringing their interest rate down. Easing turnover alongside slower values. That's what they are reporting. Let's look even more deep, and then I'll come back to the rental market, and we're going to have a bit of a rental focus today with our amazing keynote speaker being a BDM. So we are going to have a little bit of a focus on property management. So I'll come back to that in a second, but let's look deeper. So with the prospects of the rate cut, well, we've already know there's been a rate cut. There is a bit more, they're expecting a bit more optimism. And I mentioned this already, lower than expected core inflation in December is why they decided to go with a 25 basis points. Nonetheless, Lower mortgage rates should act as a net positive for housing demand, increasing borrowing capacity and providing some repayment relief for borrowers, along with lower cost of living pressures. A lift in settlement and income growth, housing demand should see some support. Low levels of newly built housing, this is interesting, should also deliver some support to housing values. The good news for housing supply is that dwelling approvals are once again trending higher. So we are going to see more stock come to the market, although this is mostly for houses more evident in WA and South Australia, and to a lesser extent, Queensland and Victoria. However, high labor and material costs are as well as ongoing competition for key inputs with the public infrastructure sector are likely to keep the flow of new housing supply at significant levels for some time to come. I'll elaborate on that, but it probably says it itself, so I won't need to elaborate. A buyer's market is what CoreLogic say here. As borrowing capacity arises with lower interest rates, prospect buyers also have the benefit of more advertised stock. Capital cities listings are tracking 7.7 higher than a year ago, and some markets are seeing advertised stock levels well above the 5-year average for this time of the year, including Sydney, Melbourne, Hobart, and ACT. Some regions have been a substantial affordability improvement since peaking in 2022. I'm not going to go through those in their detail. Other markets are likely to struggle with affordability pressures even as interest rates drop. A rise in demand of housing from lower interest rates will be partially offset by slower population growth. After peaking in the first quarter of 2023, the Centre of Population expects net overseas migration to reduce further as overseas arrivals continue to moderate alongside a pickup in departure as the surge is temporarily migrant visas expires. Less migration is likely to flow through to a further easing in the rental demand and over the medium term, reducing demand for home purchasing. Tighter credit policies could be a wild card potential for further slowing. So there's a lot going on there, really. New stock levels will increase with new housing. There is still the pressure of human resource, so building the bloody things, the materials, still a challenge, but is starting to see some light at the end of the tunnel. We are definitely getting net migration lower, so that will affect, and of course, price pressure, borrowing pressure, deposit pressure. So it's all there. But like I said, we still have I call it a honeymoon period here in Perth in particular, where we're now having the opportunity to see people actually move because everyone was holding onto their property because they had nowhere to go. So that's happening now. People are starting to move, but the prices are certainly not. Let's look at the renters. I know there's a lot of BDMs in the house today. Welcome all BDMs. Got some great stuff for you today. Okay, rental growth bounced slightly higher in January, up to 0.4% over the month. This follows subdued second half of 2024, where the national index rose just 0.4 between June and December. Every capital recorded a subtle rise in rents over the month. However, the trend is clearly pointing to an ongoing easing in rental price growth. What goes up must come down. On the annual basis, Australian rents were up 4.4%, which is still more than double the pre-COVID. We always talk about pre-COVID. It's funny how such a important or such a massive global event becomes the next yardstick. The one before that was GFC. Now it's COVID. But of course, we struggled previous to COVID, especially WA. However, with the rental growth slowing more visibly through the second half of the last year, the annual change in rents is likely to fall to below average levels in the first half of 2025. The 6-month trend in rental growth has turned negative across the two largest markets, being Sydney and Melbourne. Yes, Sydney and Melbourne, big cities, 5 million each. They are our yardsticks, 0.4 and 0.6 respectively. Finally, renters are seeing some relief after a period of extreme rental growth over the past 5 years. Capital city rents have surged by 37%. Okay, the previous 5-year period saw rents rise just 5%. So we know how tough the renters are doing it. We've got to be mindful. Okay, regional rental conditions have been stronger relative to the capitals. Yields could be under some renewed downward pressure. So that's the rental market, folks. A quick look at the Perth stats, reporting 923 sales last week. Very good, actually. Over 1,000 is amazing. Below 1,000 sales in Perth is probably underperforming, but certainly 923 is there or thereabouts. Interesting, over 5,000 properties available in Perth now, which we haven't seen for at least 2 years. Now, it's still quite low though, but it is trending higher. So be aware. These are the stats you use with your sellers. And of course, when you're needing price reductions and offers over the line, these are the stats that you use. 2,000 properties for sale, 2,055 to be exact, properties for rent in Perth, with 737 properties being rented last week. Also on the high side, but it is January. We know property managers, we know BDMs, we know that the rental department, property management department is a little skewed in January because it's moving month and a lot of activity. So it is quite normal to have that type of activity in January.